Lost. Market data connection re-established.
Alrighty, sip of the tea. Good morning here in the States, 7:31 a.m. and it is 9:31 p.m. in Tokyo. So they've already had their Friday, and adult beverages are being drunk and so forth and so on. Hey, Robin. 7:30, yes, and it's 6:30 where you're at. Hey, George. Good morning to you. 8:30 a.m. Eastern start time next Monday? I guess so. Yeah, that's right. They're going to click the clock, aren't they? I wish they'd stop that stuff. It drives me crazy. I like the idea of having a little bit more sunlight in the afternoon more than in the morning. So, especially when, especially when you can't farm, so it's a difference. And what farming you do it inside, so there's lights. Yep, I'm looking forward to that. Looking forward to that for sure. All right. What do we got going on today? It is TGIF. So it's Friday night already somewhere. Like Tokyo. All right, there's the dollar index. You can see a little red there this morning, a little surprising there, and when we look at it on the J4X, it's got the red dot. That's why we use the hinkies, because it helps to match up. The hinkies match up to our math for some reason, which is really cool. And all it is taking the open, high, low, and close and dividing it by 2. Now, it's not perfect, and it's like hours behind, but it's interesting that it matches up like that. I guess it's just part of the characteristics. You can see here, we are threatening the sell. You see that? You see the algo is moving down, and you can see here same thing is going on with the stochastic. It's moving down through the slow stochastic. The fast is dropping, so there's a little pressure there, but when it comes to actual price, not yet. And we're in a weekly buy here too, as you can see. 8:30. Yeah, I guess it'll be 8:30, so 8:30 to 9:30. Interesting. It'll be right into the action. Action, ACTION. So, where do we go from here? I mean, we keep on thinking the dollar is going to back off, but things are getting all kinds of loopy. I guess that's the best way to describe it. Loopy. The banks were really clocked yesterday. They really hit them hard. They all took some big drops. Bankers get in trouble sometimes when they start to play that game of trying to figure out interest rates, and they're probably made the mistake of borrowing short-term, lending long-term, or vice versa, and so they're getting hurt by the short-term inverse relationship to the yield curve. So like 10-year bonds are trading around 3.8, 3.9, something like that. And 1-year bond is trading for 5, So, it's like they're losing. Normally you would buy the back, sell the front, and it would be lower, and it'd be okay. And you'd use the money that you sold the front with to pay for the back. But when the back is losing dramatic money on interest payments, then you start to get whacked, and your earnings go down. And so, and the end result is and so that's where we ended up in the end. Anyhow, that is where we're at, and the currencies are trying, just trying real hard to just hold up against the dollar, and the dollar's interest rate is high, and for some foolish reason, people actually want to get paid for the money they lend. Don't ask me why. For over a decade, it was very comfortable for them to just lend money and pay to lend money, not take interest in. So what is we should explore that. What is the rationale? I mean, people got to a comfortable point where they were willing to lend money to government and not only not get interest for doing it, but were willing to pay interest to do it. Right, yeah. So I take out $1 million in my pocket, I go buy $1 million worth of government bonds, and at the same time, I pay the government for the pleasure of buying those bonds. Interest. So in other words, in the end, I come back with like $980,000 or $960,000 when it comes to maturity. So I pay to lose money. I used to talk about this all the time. I find it fascinating. So now they're getting a little antsy. They're starting to realize, was that smart or was that foolish? Did I need to park that money in things that lost money? And I guess that's where their heads were at. That's exactly what they thought. They thought, if we park this money here, we know we're going to get back about 98% of it. And it's better than losing it. Now, I don't know why they would need to lose it, because they're supposedly professionals. And you would assume that they could always put the collars on. That's what it's like, a collar on a shirt or a blouse, up around your neck. There's a collar. And they could have sold calls and bought puts pretty much unched or free, and just kept the money in a whole different fashion. But I guess what it really comes down to is the professionals who manage money across our planet have proven to us that they're clueless. A great amount of them are really just salespeople. They're really good talkers. They can convince people to give them money to invest. Then they go and invest it in a very poor way, and everybody thinks they're smart. And that's the only thing I can figure out. And now they seem to be getting antsy. It's been, since 2008? It's 2023. That's 15 years. And they're starting to realize, the investor gives me money, and I'm supposed to invest it and make money, not lose it. Oh, how unique. It took 15 years for them to realize that. Fascinating. It always blows my mind. I've been mentioning it here at Duke from day one. I found it incredibly odd. But then, that's me. All right. So that's my understanding of yesterday's smash and bang against the bank stocks, is that they're losing money. What? Since when do they care? That's the amazing part. Oh, my goodness. So now let's dance our way over to the European Union, the second largest economy in the world. And let's see, the second most active currency in the world. When you're the second largest economy in the world, you become the second most active currency in the world. And there is the euro. Euro on our wall. Let's see. And we go to there, and we go to there. And let's take a look at that. And you can see it's trying to lift up a little bit here. You can see it's going through. So the dollar is allegedly breaking down, but we saw where it is actually physically up. So some of the other currencies, of the 6 currencies that make up the dollar index, obviously are, moving in a different way than the euro is. Oh, here we go. We got someone. Hi, Doc. Well, hi to you. Is that we'll call you J.A. Hey, J.A., how you doing? I watched your old videos. Are great. Well, thank you. Yeah, I like to say I'm real crazy. I'm real crazy. You talked about it yesterday, but it's crazy that the U.S. doing it also. We are real socialists. Don't beat us up. Well, I'm not beating you up. You know what my sons have done? They have a little robot factory, and my 2 sons, they're in their 30s, and they have a little robot factory, and they're inventing some unique robots for warehouses and for people to use, and they named it the windmill from Animal Farm. And so, let me think. What else? What was the little guy that wanted them to start the windmill? There was a one little pig or one little animal, and I'm trying to think. They've also named other things from the characters of Animal Farm, and the windmill is from I can't think of the piglet that wanted to create a windmill in the beginning when they took over the farm. So they pushed out the capitalists, and the socialists came in, and they knew that they could run the farm better. And so it's a funny thing, you know. It is. It's a funny thing. It's not that I make fun of socialism. I just kind of report how it functions. That's all. It's just like our work. When we look at our charts here, you see here, when we get a sell signal, usually we find products have a way of going down, and it works that way in many other ways also at the same time. And so socialism is a failure everywhere on the planet. It doesn't make anything grow. And so, except for irony and tyranny, it seems like to me. But if you believe that you think that socialism works, God bless you. That's a great thing. And if you want to live inside that type of universe, good for you. It's I can't think of the piglet's name now in Animal Farm that wanted the windmill. In the end, they never built the windmill. Everybody liked the idea that they were building a windmill, but they never did, unfortunately, and they thought they would get all that free energy, and we'll see how that all plays out. But it's funny, Well, I appreciate that. I thank you for saying that. I look at things kind of realistically. Like, in other words, if something goes down and my math says it's supposed to go down and it goes down, then I trust it. And if my math said it's going down and it doesn't go down, then I'd go build a better math. I'd come up with a new formula. And so I kind of look at that throughout all of society. When I see them say, in other words, I put out a spreadsheet that shows my consistency over the decades. I've been putting it out for decades. And it shows, as a track record. That's what it is. It's just a basic track record. And I think everything should have a track record. And if things don't work, well, then you try to make them work by, adjusting, learning, rebuilding, that type of thing. Yep. And this is ridiculous. Oh, total. Nope. No, I'm capitalist. Right. Exactly. I'm amazed and astonished. I think that's the best way to describe it. Quantitative easing was supposed to end in a matter of like a year, half a year, 2 years, And once the politicians saw free money, oh my God, it's like throwing, food to sharks. It's like, oh my God, they just get excited and they chew it up and they spend it. This year in America, we had record tax collection in dollar terms. And all the politicians want to do is raise more taxes. It's like, no, spend less because we're bringing in more money for you. Not let's see if you can spend more than we bring in. It's stuff like that. It's an amazing thing. I'm fully invested in stocks and cryptos, so not from me. I like you, man. You have a great. Let's see. Watching all your old videos. That's so cool. I appreciate that. So I think that one of the smartest things anybody could do right now with the uncertainty that we have around us is, especially when you go and look at the stock indices. Let's jump over to the stock since you're talking to me. Let's check them out. And here is the S&P 500. Right. There's the dollar. And there's the S&P 500. Now it's trying to come back up in here. Now we've been, once our this line breaks down here, the dashed line, I automatically start thinking about putting collars on over to protect assets. So in other words, I sell calls and I buy puts. And I use the cash from the calls to pay for the puts, so it's almost for free, or it is for free. And then if we lose the long-term investment asset value on paper, that is, of course, because we're long-term investors overall, then what happens is I get more cash to buy from the market to replace what has been lost. And so, I've been kind of on the hedge side of things the last couple of weeks. We did have some interesting bounces, and for people buying SPYs or something like that, they should hold on to them and dollar cost average into them at this point. They will turn back up again, and the market will firm up again. And obviously, the real logic is buy low, sell high. So you really want the market, you want to start investing in something as it's going down, not when it's going up. We refer to that as cannonballing. When you invest, like you buy high and then buy higher and then buy higher, what you're doing is you're setting your price higher, not lower. You want to average in at lower prices, not higher prices, because when they go down, you end up getting much more pain out of it. No, you can ask any questions you like. If you can bring up a topic, trust me, I'm willing to talk about anything here. You never know, and I'm talking about me. You never know what I could learn from you asking a question. You just don't know. I don't think I've ever mentioned the fact that we've been experimenting with this blue dashed line since 2016, 2015. I finally got it figured out how it works, and how it relates to the other algorithms. And I don't think I've ever said in the webinar before that when I see it dip underneath, I have a habit of selling against my equity. I sell the calls and buy the puts. I do it for free because the worst case scenario is it breaks even. And so just by you even discussing that or talking out loud has made me say something that I should have said months ago. So don't stop talking. You can ask any question you want, and or bring up any subject you want. We'll go after it. We like that stuff. So also at the same time, I can show you that I had a sell signal in the where's that? Right here. We've had two warnings that we talked about yesterday. We didn't talk about this one. The Dow Jones Industrial Average has both the fast and the slow algorithms been in the sell now for weeks. This is going on the fourth week. So I knew there was issues coming. That's why I didn't want some people to sell their SPY low. In other words, it'd be better off just averaging into another equity of some form and adding more to it in a sense. And then at the same time, we talked about it 2 days ago. We used it as a headline or a title of the webinar. And that was that we were a little perplexed why Bitcoin was breaking down throughout almost the topping out here. And at the same time, let me put the sell thing in here. Yeah, there it is. And then at the same time, we saw the stock indices acting firm. And we really do believe that the Bitcoin, in particular the crypto, is a good leader in the equity market. It really is. And you can see here it's still breaking down. And, it's interesting. It topped out in here. We went into a sell right here. And you can see that it really broke down. Our weeklies breaking down. Everything was getting through the manifolds here, which is a warning sign right off when they both break it below the nonlinear time manifold here, the plus one. And then when they start breaking the zero line, run for the border. Well, no, you can't run for the border. They might shoot you. So I don't have money, just stocks and cryptos, silver, and house and sporty cars. Well, they're all good investments. Nothing wrong with that. In other words, you don't keep a lot of cash. You're not in cash. I don't blame you. The idea is to be invested and not to buy something and then sell it lower. The idea is to average into it and then sell it higher. You know they're going to go higher. Sooner or later, they're going to get their game together. And so that is the answer to that. What else can we say about any of this? You know, I mean, that's what's so unique. And we have numbers coming out in 40 minutes, so it's going to be fun. You know, people are going to get, you know, the money managers are fun characters to watch. There's very few of them that are very intelligent. It seems like, you know, over the years I've seen that. Ethereum, yeah, I like Ethereum. I don't get a good futures contract for it. I should look for one. I think they've probably Ethereum and Bitcoin are very efficient, and you can see them, and you can follow them very easily. And I follow Bitcoin for that reason. But Ethereum now has over a year of time. So, in other words, I think they've been trading a futures contract or doing something with it. We have an ETF we follow. Let me show you the ETF we follow. We follow the, let me just throw it up there on the screen. Where's it at? It's right here. Open Sesame. I follow Coin, COIN. It's an ETF. It's an exchange for basically the crypto exchange. And so it's actually a legitimate one. There's no funny business going on like some of the other ones that are out there with charlatans and snake oil salesmen. Let's see, I'll find it in a second. It's right there. There we go. Robin Stock. There we go. And here it comes. And right there. Coin. We follow Coin. Coin is breaking down again. You know, went into the sell. That's the, what is that? That's not today. Okay, yeah, so that's yesterday. So it must be breaking down still. And the weekly was breaking down. You know, it was pretty steady. It looks very solid. You know, it's nowhere. Like I said, this is a coin. This is a crypto exchange that's a legitimate one. And so, you know, we follow that, and you can see that it's been, you know, pretty solid. You know, it's not getting beat up. We can show you what happened when that FTX got crushed. I think it took a hit. Let me think. Let me go find Bitcoin again. And we'll find, and it'll reflect the FTX real clear. I guess that's what it was. So it was November, okay, right there. You know, we were in the sell there, and it collapsed, you know, from the news, and so that was at the beginning of November. So let's look at let's go back to Coin and look at the beginning of November, and so it did the slide also in November right there. Went into a weekly sell from the 70s and slid all the way down into the 30s, and then they realized that, you know, things are not it. They're not the problem. And then sure enough, they got back up into the 80s from the 70s. So it actually picked up, and now it's hanging out in the 60s. So that's a good one there. Let's see. That's a good thing. Yeah. Oh, I just realized it. I wasn't using the right mouse, so we lost the picture. Here it is. We'll get this to there. There we are. And you can see right there. There's the coin. You know, let me go back to it again so you can see it. And so, you know, it fell down from the 70s, from that disaster of that crazy politician / snake oil salesman, free somebody or another. And you can see here it got up into the 80s, and now it's been hanging in that range again. So it's back to health, you know, and that's because it's legitimate. And now it's just feeling the pressure because of the market forces itself, probably just, you know, liquidation, profit taking, that type of thing. Oh, you want to learn day trading? Well, that's cool. Intraday trading, or let's see, you want to trade like in and out during the day itself. It's my word, haha, plus stock and interactive brokers and Dukascopy is excitement for day trading. Yeah, yeah. We have conversations about it. We talk about mechanics of it. We have somebody right now. We'll show you someone who's following. Let's see if we can do here. Let's get rid of that, and let's close that, and let's open this, and then and open workspace, and we go to here. Is that it? Yeah, that's it. There we go. Well, we can have conversations about day trading here. We do that a lot. We like to talk about stuff like that here. And so you can see here, we go into the buy at that point, and then the product goes up in value. It almost got into a sell there, but see how, oh, wait a minute, it did. Yeah, it did. It got into a sell there, and it went right back into the buy again, right there. And this is the S&P 500, and this is a longer term one. This is what we refer to as a 2 Tesla. Or is it a 2 Tesla? No, it's 3. Yeah, it's a 0.618 Tesla. That's what we call it. 0.618? No, it's a Tesla and 168. So it's 1.62 Tesla. That's what this is. We refer to Tesla as a 396. Okay, that's a Tesla, and so this is a 1.62 Tesla. That's what the bars make up. And then this one is a 18,000. So what is that? I forget what this is. This is like 27 times or something like that. No, it's a. I forget what the calculation is, but it makes sense when I break it down. I'll have to think about it for a few seconds here. It's 18.239. So it's 18,239. This one is 786. Right? And a Tesla is 369. And we play around with those numbers. And you can see here it goes into the buy here, and it emphasizes the upwardly movement. It goes into the sell right there. It reflects the downwardly movement. And if my math didn't do this, I wouldn't be doing my webinar. If it wasn't that accurate. You know, that's what it really comes down to. So when it comes down to day trading, we have to kind of like take that apart. What day trading is and how to do it. Okay? So day trading, there's intraday trading. Then there's kind of like position day trading. So what happens is you put a position on and you're playing for the next day or two. And then there's intraday trading where you're putting a position on for maybe 10 seconds or 5 seconds or 2 minutes, depending on what got you into the trade will get you out of the trade. In other words, the tools, the way you set them up, and how to use them. Let's see. I'm just living by investing, plus want to learn swing trading and maybe watch some day trading, but for me is too much. It's very intense. It is very intense, and I'm more of a fan of options, and always have been. So you really, when you think about trading, you want to think about understanding and learning calls and puts, and take the time, and that it won't hurt. You can ask questions here anytime about options, anything you want to know. Whatever there is out there to know about options, I probably know it. I'm just living by. Oh, that's a repeat, I guess. Plus, want to learn trading. Yeah, that was a repeat. Okay, so I'm the first thing to suggest for you is to look into learning about what a call is, what a put is, what a strike price is, what an expiration is, the expiration, and the premium. Okay? So in other words, I'll repeat that now and put it more together organized-wise. So you want to learn about the call premium, the put premium, because that when you buy a call or sell a call, you're buying and selling the premium. Okay? When you're buying a put or selling a put, you're buying or selling the premium of the option itself, the put. All right? That's the value itself is the premium. All right, now the strike price is the level. It sets up the level of the value of the option itself. In other words, in this case, we're going to use simple numbers to describe this. If the product you're trading is $10 and you buy a $9 call, it is obviously more valuable than a $10 call, or 11, or 12, or 13, 14, 15, 16, 48. Okay? In other words, the $9 call is more expensive and more valuable. Let's not use the word expensive. Let's use the word valuable. Okay? It's more valuable than the 10. It's more valuable than the 11 and the 12 and the 13, 14, 15, 97. Okay? All right? And obviously, if you bought the 8 call, it's more valuable than the 9 call. If you bought the 7 call, it's more valuable than the 8 call. That's why 7 is scared of 8 because of 8, 9. 7, 8, 9. Oh no. So that is the first part of being a intraday or daily trader. Okay? You want to learn the options. Okay, that's an important thing. Second of all, there are trading intraday in a reactive universe is totally different in the old days compared to trading intraday in a proactive universe. Reactive versus proactive. That's a whole different game also at the same time, because you're not standing on a trading floor and orders are not coming at you. Okay? And so instead you're proactive. You've got to use technical tools or depending on your time frame of investing, be it an hour or a day or a week. It comes down to the technical indicators or fundamental indicators that you're using to get you into that trade, and that whatever gets you into a trade gets you out of the trade. How's all that? How's that sound? I'm going to wait for a second, have a sip of my tea, and see if any of that makes sense. Ah, there's the speaker. Excellent. I'm going to raise the volume up a little bit on that. So, J.A., how's that all sound so far? But we'll let J.A. figure that out. Now what we'll do is we'll drift over to, where will we drift over to? Let's drift over to one of the bigger economies of the world, the British economy. And we'll take a look at the British pound. And there it is right there. British pound has been trying to lift up nice the last couple of days. Didn't get into the buy yesterday, but it is definitely getting into the buy today. And look at this on a Friday. We are dancing right on the edges. We got a good shot next week to see this thing climbing through the weekly if they keep on buying it. That would be cool. So now let's put it up on J4X. And there it is there. You can see the daily is trying to lift up today, just like it's doing right here. And you see the green line roaring through the slow stochastic. That's a goodie. So, what else can we say about any of this? The pound is... We keep on expecting more out of the pound. We know they have a lot of political issues going on. So we know that there's a lot of odd, involvement, or I guess you could say forces pushing in different directions. We'll see. I have great hopes all the time because of the Commonwealth that the pound is going to stay much stronger and get better, because the Commonwealth is the biggest, I guess you could say, the most populated economic community in the world. The Commonwealth, includes, Nigeria, South Africa, Jamaica, Kenya. Hello, Timothy. Canada, Australia, New Zealand, Britain, or Great Britain, which includes like Northern Ireland and Wales and Scotland and so forth. And so, Metho! TGIF, Metho! TGIF! Thank goodness it's Friday. So, the British pound, I always think, is going to do really well over time because the Commonwealth... Oh, it has India. What am I saying? It has India in there too. So it's the largest populated economic group in the world, and they have floating currencies. A lot of them have their own individual currency, so you can actually measure their success and failure pretty well. Oh, there's JA. Okay, yes. Intraday trading is hard to control emotions. Right. So you have to really work at the decision process itself, make it mechanical. In long investing, it's easy because you have so much time to think how you're relaxing or doing it. You're right. Yep, I will start with swings now. My positions are in years. Good. That's a good thing. Swing trading. Let me look at the definition of swing trading. I'm always a little confused about that. I like the name of it, though. I think that's a conglomerate of a bunch of different names, really. Let's take the mouse and take a look at that. And what do we have up there? We're going to move the picture over to an intraday while I'm exploring that. Let's go back to the intraday so you can see the stock market here. And watching it tick away live. Now, let me go look at the definition of swing trading. Because I know what I think swing trading is. But it seems like there's a few definitions out there of what swing trading is. Swing trading. I keep on hearing Glenn Miller when I think about swing trading. I don't know. All right, swing trading. Swing trading refers to a trading style that attempts to exploit short-term to medium-term price movements. See, that's not clear enough for me. What is short-term? 3 seconds? 10 seconds? A minute? What? Medium. What is medium? Is it 2 minutes? 5 minutes? 15 minutes? What is medium? Movements in securities using favorable risk-reward metrics. Wow, let's try that one again. Medium-term price movements in a security using favorable, I like this, risk and reward metrics. Swing traders primarily rely on technical analysis. Yep, we agree there, because the shorter term you trade, you need to use technical analysis to determine suitable entry and exit points, but may also use fundamental analysis added filter. Woo! Swing trading, what is it, and pros and cons for investors. Interesting. All right, so yes, exactly. Swing trading is a short-term form of trading, and definitions of short-term needs to be clarified when talking about that subject. Like myself, I kind of talk, nuts and bolts. Like, is it like maybe 3 seconds to 20 seconds? Is it, what are you basing it off of? So forth and so on. Oh my God, I love this one. I gotta share that one. There we go. So, that's the swing trade thing is, oh, okay, good. Now you're getting into the nuts and bolts. I like that. Positions. I like MACD, stochastics, and RS. MACD and RS are laggard indicators if you take what we have on J4X. Let's show you J4X here. Let's see. Let's go like this. Can I move that over? Should I move that over? Let's see. Go like this instead. Here's J4X. What we have here is an example of a more accurate way compared to MACD or RSI. Resistance lines are a different thing. In other words, they're support and resistance lines versus RSI resistance. What is it? RSI is a resistance indicator or something like that. But end result is that notice how the fast-moving stochastic, when it turns up against the slow-moving stochastic, and you can see let me show you the internals to that. Edit indicator. So a fast stochastic, this is the slow stochastic. We're only following the D, okay? Right there, the slow D. And, to show you, it's just a slow D we're following. And it's one width. And when we look at the input, it's 533, okay? Now, when we look at the fast stochastic, we match them against each other. This is the fast D, and we blank out the K. And there it is. And then this is a 5-3, or in this case here, it's just the 3 really, because it's just the D we're following. Okay? So that's a good tool. I'm not a big fan of MACD or RSI because they're a laggard indicator when using. When you look at the Market Technicians Association description of different indicators, some are laggard indicators, some are leading indicators. They have MACD and RSI as leading indicators. They have stochastics as a lagging indicator, but it's not. When you put a fast and a slow together, it becomes a leading indicator much more than the MACD. The MACD lags it. So that's one thing right there. Okay, so JA says, but in stocks using purely fundamentals for like 3,000 companies, which, or I'm doing myself, it took me like 4 crazy years to do it. Yeah, I hear what you're saying. Trying to, that's like herd immunity in a sense. You're following the herd. Everybody, the money managers go to school in Wisconsin or Harvard or NYU, and what they're doing is they're all following the same logic, I guess you could say. So they do kind of, they're kind of inbred, I guess best way to describe it is I like to look at them as inbred. They have a characteristic of they're all doing the same thing, and they dollar cost average the same way, and they do all their homeworks the same way. They just have a little flavor, like one cooks. If you take 3 people cooking a steak, each cooking steaks, without a doubt, with the same type of grill and the same opportunity, each one of them is going to taste a little bit different. And that's the same thing with money managers. All right, now let's go to, let me just put up another product here. There's the Swiss. You can see the Swiss is starting to pick up against the dollar again. That's nice. So JA says, okay, I will train it and do mechanical. It's like several day swings, 3-5 days. What's that with the slow and fast stochastic? We use it on dailies. We can even look at it right now on an intraday. Let's see. Probably the best would be like 1 minute. I'm more fans. I use Spatial. So as far as I'm concerned, I don't use minutes. But you can see here, the product found a way to go up. You see the green line turned here. And then when the hinky turned green, it went up in value. Vice versa. As you can see here, the green line broke through the stochastic. It was at the high end of its range also at the same time. And we got red, and it went down in value. And that's basically usually the way it works. Now you can see here, it went sideways. And it went in and out, in and out. And that's the pain of a minute. Now let's see if we can put a Spatial up there. We don't usually do that here. See that? By you asking questions, we're exploring ideas that we normally don't explore. So it's a good idea that you ask questions, not a bad idea. Okay? Now here's a 3 tick. I want to change the tick. Let's see if I can add more. How do I do this? I want to do a tick. Ticks. And time-based frame. Where can I go? Ticks. I want to do ticks, but I want to come up with a different reference. I want to put a Tesla in there, like a 396. How do I do that? Ticks. Ticks. Let's see if we can come up with this price-based. Okay, let's try that. Ticks. See, it's not letting me do that. Periods, maybe? I want to put in there like a full Tesla. Let's see. Periods. Calculations? No. 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 Well, we're going to have to try to explore this. And, in this case here, you can see that now the second time when it turned up in here, it did catch the top. And it broke down nicely. But I'm not a big fan of what I call Newtonian time or fixed time. I'm into spatial time. So that's part of my secret sauce. So we'll have to work on that and try to figure out how to put a Tesla in on the J4X. If I can find how to get back home. There it is. So yes, going back to your question there. Nice move down on that Swiss. Let's see. You will train it. You'll do the options. In other words, you'll start to explore options. Right? Is that what you mean by training it, or you're going to start looking at different technical analysis? I'll sip my tea and give you a chance to answer. I have a lid on my tea cup. $396. George, 396. So Nikola Tesla took the frequency of space static, I guess it's called. The sound of solar wind. And he noticed that 396 came up a lot. So he was very, very intense on that. And so and it's kind of like, when they lay a baby down on their mother's chest after they're born and they start to go in sync with the heartbeat, or, a cat or a pet will lay on you and they become very comfortable and they fall asleep because they're happy that they feel the heartbeat. Tesla looked at the space frequency as like a heartbeat, and he saw the numbers reappear in other things that he was exploring. So he referred to it as 396, his magic numbers. I refer to it as a Tesla. So that's what I do. JA says, okay, I will look more on stochastic and see if it lags less than MACD. Oh, it does. Trust me. We do evidence of it all the time here on Dukascopy. We show it, where we put MACDs up against the fast and slow moving stochastic, and the MACD falls behind. Now, just a stochastic falls behind the MACD because they're both the same math. When doing a MACD, it has a combination of stochastics and averaging in it. So it's a little bit more advanced. It's like looking at Hamiltonian and Lorentz type of mathematics compared to, just the combination does it. So instead of one or the other, and bootstrap that sucker like it's string theory. Boot that sucker, string theory. Yeah. Don't mind me. I'm just slipping out into the Netherlands there in my head. Anyway, so I wanted to bootstrap it. It's an expression they use in string theory. Anyhow, because they use Lorentz and they use Hamiltonian to measure, and so forth. Anyhow, so yeah, MACD has like a flavor of stochastic in it already, and so when comparing a plain stochastic against a MACD, it's a laggard, the stochastic. But when you put a fast and slow stochastic against it, it's a leader ahead of the MACD. And so that's what that is. See, JA, don't be afraid to ask questions, because we get a chance to explore ideas that we normally don't do. Instead, I'm just like looking at each one of these currencies. Now, anybody out there who's listening, if you would like to see something, on the currency-wise or metals-wise, gold or silver, whatever, just say it. We'll put it up on the screen while we're rambling about other things, Doc is capable of rambling many different ways, especially when it comes to the market. What else we got going on here? There's the yen. The yen seems to be breaking down, but it's up in price. So that's kind of interesting. I can't wait for the math to tell us what that's about. Right there, you see it's been in that weekly now for a couple of weeks. You see all this right there. It went into the weekly buy, and you can see our fast algorithm never even went down, never even broke down when the slow did. And you can see here it stayed in a daily buy for that whole ride, all the way to that point right there. And then it jumped back into the buy and then went back into the sell, and then the next day it was a little bit weaker. But we were in a weekly buy, so you don't take the shorts, you just take the profits. So that's the name of that game there. We got 10 minutes to the noise. I can't wait. Can't wait. Me can't wait. Me and Jar Jar Biggs. All right. So from there, we go over to. I'm just waiting for another question. So I'm just going to go through the rhythm of all these products. And there is the Turkish lira. Oh, they had another crazy Ivan again. Look at that one. Let's put it up on J4X and see if we spot a big line like that in it. We'll go with the daily. Where is it at? Turkish lira. No. Oh, there it is right there. There we go. Now, it doesn't really reflect. It says 19 and change. And this is over here is they're trying to tell us it went down into the 16s. So that's pretty wild. Okay, I will dig options. I will dig options already studied strike price. Okay, thank you. I must go. We'll watch rest of the recording. Okay, cool. Yep. Have a safe and smart weekend, JA. And if you don't mind me calling you JA, it's a lot easier. And we'll thank you for the wishes of the weekend. We will catch you later on the flip side on TGIM. Thank goodness it'll be Monday. Yeah. All right. So from there, where do we go? We go into the Turkish lira, and it's jumping around. Very illiquid. Unfortunately, it's become an incredibly illiquid currency pair over the last 9 months. It's a real disappointment. As much as it was nuts going from 1 and change to 20, we were really happy with the orderly fashion it was doing it in. In other words, it was pretty liquid. But now they must have run out of their money. They probably don't have anything to borrow against anymore. And then the earthquake comes along, and that really puts it even harder on them. So. All right, from the Turkish lira, we go over to two currencies that we follow and look at metals and energy with. In this case here, you can see this is the Canadian roaring up. Over here, we're going to put in crude oil, and it was more than likely finding a way to go down. Light, we're going to look at light crude right there, light Texas, and you can see it's going down in value as this is going up in value. That's what they do. Now you can see here we're at the bottom end of the range. We got 3 red days in a row. The green line hasn't turned yet. And now what we do is we dance our way over to the South African rand right there. And we'll go look at gold over here. And right there. And right there. Gold. And so you can see here, gold is trying to get into the daily buy today. It's been turning. At the same time, you can see we don't pick up that line during the trading day. Let's see, where is it at? That is South African rand, so it's rising. That means gold has been going down, and sure enough, you can see it's been going down. And now, for the last couple of days, you can see it's trying to lift up. It bottomed there. It's trying to lift up. We start to get a buy signal. We had a red and a green, so it kind of took away from getting into the buy there. But today it's trying to get into the buy there. That's why the green line is up at the top, not down here with the rest of them. And you can see here, this is trying to roll over at the same time. So it's interesting. Well, we can switch this out. Let's go to gold on this, like so. Right there. And put the rand up on this here. And right there. And so you can see there, that's a Mexican peso. Interesting how it's roaring off the bottom there. I guess they're a little freaked out on, they're getting pretty warlike over here in the States. They want to go after the cartels like they're a terrorist group. So that's going to be real interesting. They get the full force of the U.S. military pounding down on them. I don't think they want that. That's definitely not the game they want to play. Now there's the South African rand. You can see as it's rolling over, Normally, gold would be going up in value. And where is gold on here? There is the gold. No. Yeah, that's gold. And you see it's trying to turn up, and it's come off these lows. So it's doing exactly what it's supposed to do. The rand goes down when gold goes up, and vice versa. Not bad, eh? Woo, we're working it. So now, yeah, baby, we're working it. All right, so now let's move over to the last one. We went to the Mexican peso accidentally. Let's check that out, because look at that action. That's from yesterday. There was some real crazy talk in a good way, because what they did is they killed a couple of American citizens in cold blood. You know, they just took, and the problem was that they were like two brothers and a sister or something like that. They went to Mexico for plastic surgery, and some gang grabbed them and killed them, and like killed 2 or 3 of them, or there were like 5 of them in a car or something like that, or 4 in a car, and 2 were killed. And so now everybody's on fire here. They were from South Carolina, and everybody's on fire. They want to declare. They talked. They were talking about this like in the last 3 or 4 days. They want to declare the drug cartels as terrorists, which makes sense to me, of course. But you know, that's me. And then they're going to use the military to go down there and just wipe them out. Sounds good to me too. What the hell? I mean, you know, supposedly every drug dealer statistically kills 500 people in their lifetime. That's an incredible number. And they don't get punished for it. So they're saying that if you get arrested for drug dealing, they want to consider it murder, that you're a murderer. So someone, let's put it this way, someone screwed the pooch by killing a couple of Americans in cold blood. You know, they're not the Clintons. You can't just go kill Americans, except for the Clintons, it seems like. But anyway, they have really got a hot nut for this now, a real hot nut. So, all right, what else do we got? We got 2.5 minutes to the news, so I can't wait to see what happens. One minute and 50 seconds. So, we'll see the launch of that. What else did we see? We sold gold. Oh, let's check out silver. Silver is really funny. Let's watch silver the last few seconds here. Close. It's like locked in this sideways thing. You know, look at that. Just locked in the same price for 4 days now. Just hanging on the 20. What else is out there that we haven't looked at yet? Let's see. Bonds. Bonds really started taking off. That's usually even the 5-year started to take off. I thought that was kind of unique. Interest rates are dropping. That means flight to safety. Someone is getting nervous. Someone's feeling very nervous. Right there. You can see that. Look at that. That's the 5-year. 5-year. Jumped yesterday. It's jumping again today. Okay, where are we? We've got 50 seconds. Let's get into position. There's the intraday for the stock market. Right there. And let's see what else we got going on here. Look at that. You know, we know the news is out already. They've given it to the reporters already. We've got, what do we got here? We got 20 seconds starting right now. 19, 18. We should do like the NASA thing. When we get to 10, we'll count down. How's that? So, moving up to the launch pad. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. It's out. Look at it. It just froze. What does that mean? It just froze. So there you go. The S&Ps have just run from 25 to 5. Now they're down to 85. No, was that 95? Now they're at 9. Now they've jumped another 25 points. Let's see what the numbers were. This should be very interesting. Well, they really fixed this one, didn't they? They're really starting to buy into it, aren't they? That's interesting. That's always fun to see. Let's see what they did to the British pound. We have the British pound on a 1 minute on this same page, so let's check that out too. There's the 1 minute. That's over Timothy. Oh my goodness! Look at that! Look at that spike. It went from 119.90 to 120, 40 what? 120, 40 something? 120, 34. Here it is. Here's the numbers. 311,000. So it was supposed to be 205. It came out as 311. The Jan revision. So unemployment now rate is 3.6%. Crazy. Oh, where's it at now? Is it still okay? No, it's calmed down there. So let's put that away. And the stock market is still moving up. The lemons are running over the cliff. Good for them. Take it to the moon, boys. Take it to the moon. Give us a 200-point day. Come on. Roar this puppy. Kick that pig. Make it squeal. All right, traders. What should we label today as? Intraday versus, let's see, swing trading and intraday. How about that? Because we had a good conversation with JA about that. That was pretty cool. Let's see. Dang, ding, dang, da, da, dang, dang. Let's see. Title today will be, how about swing our average hours worked was down a little bit. So in other words, people being laid off or not working as hard because they don't have the the companies don't have the money, they don't have the demand, so forth and so on. There we go. Alrighty. So, this is Doc from North America. We will catch you all tomorrow, Monday. Same time, same channel. It'll be, I guess they're doing the time thing again. So, it'll be same as usual, GMT, but it'll be 8:30 versus 7:30, I guess. I like the 7:30 more. Anyhow, this is Doc saying, happy trails to you until we meet again. That's be Monday. Happy trails to you, to all our trading friends. Later, traders.